All right, folks, welcome back. We're going to be going over something that's very, very good when it comes to depicting daily biases. Very, very good. If you use it properly, of course. Now, you're probably like, well, what is the concept? Price delivery cycles. You saw it in the title. Duh. That's why you clicked on it. You're like, I've heard JJ mention this before, or I've just never seen this. Well, what is price delivery cycles? It's literally um, parts of delivery in which it turns into a cycle that price follows. You're probably like, what? Yeah, I swear to God, it's literally a price delivery cycle. It's a psycho, and that's not psycho, but different sets of delivery or stages of delivery that is compiled into a single cycle that price follows. That's why it's called price delivery cycles. Duh. Anyway, this cycle contains four parts: consolidation, expansion, or reversal. Well, no, not or, but reversal or retracement. Okay? Because after a consolidation, when you leave the consolidation, what's the only thing you can do when you leave it? You have to expand. You have to expand out of it. So the only thing that can happen after a consolidation is what? Expansion. So first stage is consolidation. Second stage or second part of the cycle is, well, let's call it a stage. First stage, consolidation. Second stage, expansion. In which the third stage can only be one of the two: reversal or retracement. You're probably like, how is that? Why is that? Well, because if we consolidate, then expand, let's say we expand lower, right? Like, let's say, well, this isn't an example of it, but let's say we just expand lower. If we expand lower and we want to continue lower, what would we have to do out of those two? We would have to retrace into that swing lower and keep going lower. Duh. But if we consolidated, expanded, and we wanted to go the other way, which was go back up, we would have to do what? Reverse, which is the reversal. I don't know why I keep having to burp. I keep having hiccups, but I'm going to keep teaching. That doesn't phase me. So I'm going to show you a reversal example that just happened today, but I missed majority of the move because I forgot what I was doing, but I think I missed my immediate rebalance entry like up here, and then it dropped a little bit. It was very, very stupid, but I keep missing my entries. It's kind of pissing me off. I might just take a break from the markets for like a week so I can produce content for you guys and really, get back to trading afterwards. But anyway, here's an example of it in which I forgot to mention this. We're going to be applying this to the kill zones just to make it easier. The price delivery cycles are universal. This is universal. When I say universal, this goes for any asset that is controlled by the algorithm. Any. It can be gold, it can be silver, it can be euro dollar, it can be Nasdaq, it can be S&P 500, it can be what else? I don't think Bitcoin is controlled by the algorithm. I really don't think so. But anything that's like compatible with the algorithm and is like obviously being controlled, and you see that ICT concepts are working in it, then yes, price delivery cycles are there. You're going to see this happening on daily, 4 hour, monthly, weekly, 1 minute, 2 minute, 3 minute, 15 second, half second, all that. You're gonna you're gonna see it everywhere. So just keep that in mind. But to make it to where um what's the word? We put it on like a daily perspective, like an intraday perspective, we're going to be applying this to the kill zones. Because these kill zones can do a lot. I might have said before they can only, have increased volatility, but these things can do a lot. But anyway, enough of that. Typically, you would want to see Asian consolidate. Normally, that's what Asian is normally supposed to do because it's the start of the day for a new price action for the rest of the day. So, for the start of the day, you want to see price consolidate to actually build up some sort of liquidity in volatility, right? Yeah, that's normally supposed to happen, in which it does. Down, up, down, up. You get the point. It's consolidating, right? Now, the best I will advise you, it's best to look at the price delivery cycles or just the delivery of these kill zones to actually find out what price delivery cycle price is going through on the 15 minute. It's pretty good to see it on there. Maybe the 5 minute just to get a deeper look of how it looks, but I'll say the 5 minute and 15 minute are best for actually seeing the structure of the delivery so you can understand what price delivery cycle is going through. What price delivery cycle price is going through. Kind of a tongue twister, but you get the point. So here we are in the 15 minute. We can clearly see that we turn it off. Asia expands. This is Asia right here. Not expands, but it consolidates. My bad. We have Asia consolidating. Then, right after Asia ends, it doesn't have to be exactly on it. It doesn't have to be exactly during these kill zones, but normally you would see these kill zones starting or continuing these cycles, okay? In which around 11:30, still in Asia, we begin expanding out of it, okay? In which we violate Asia's high, taking its liquidity. After we do that, we create, boom, a high. Then we start dropping, in which London kicks in, and London if Asia consolidates, you're probably like, if, what do you mean if Asia consolidates? There's a different mechanic of Asia. I'm going to show you that yet. Not yet, but I'm going to show you that in a minute. But Asia can expand, in which we can still follow with a price delivery cycle, but don't even worry about that. There's a totally different mechanic to that. So since Asia consolidates, we would want to see London. Well, since we already expand, in between the little time gap here or the kill zone gap, we already expanded. So you want to see London do the what? The reversal, okay? In which price consolidated, expanded, and now it's reversing. These price delivery cycles, let me drill this into your head because it took me a minute to realize it too. But normally, okay, listen to me. Normally, you would see Asia, the full kill zone. You would see it consolidate the entire thing, right? Then you may see this gap in price start consolidating a little bit more, in which when London kicks in, you would likely see it expand and or retrace in the same instance. Sometimes you would see that, but sometimes London can just do one part of the delivery cycle, which is which is just expand, and then this little gap right here, which is London lunch, going into pre-market, will either do the last part, which is retracement or reversal. But in this example, basically what I'm trying to say here is it doesn't have to be designated to a specific kill zone because it's not always going to do that. You're going to see price delivering, right? Like you can see it right here without the kill zones on. It consolidated, expanded, created a high, rejected off of it, tried to reach it, failed, and started reversing. So consolidation at stage one, expansion, stage three, stage two, and then stage three is what? It reversing, in which it continues going down for the rest of the day, where that's the final stage of the delivery cycle, in which price should follow that delivery cycle for the rest of the day. But just understand that the kill zones aren't always going to follow what it's supposed to do. Like normally you will see Asia consolidate, normally you will see London expanding, and then London lunch, which is I think 5 to 7 a.m. If you want to mark that out right here, if I like, hold on, we do it real quick. 5 to 7. You would normally see that time doing the what's the word? That's the last stage, the third stage of delivery, which is either reversal or retracement, and sometimes going into pre-market too. Or most of the time, you would see London Lunch doing that third stage, and you will see pre-market preparing or having the last stage of preparation before 9:30 opens. But I just have to drill this into your head so you understand that. What was I just about to say? It doesn't always have to be designated to the kill zones, in which normally it is. Okay, I'm going to drill this in your head multiple times. Normally it is, but since I said this concept is universal, the algorithm doesn't have to exactly follow it through time, but it's good to apply it 2 times so you can see how it actually um, gets delivered and how price actually cycles through delivery in certain kill zones in time. Anyway, let's move on to another example because I've yapped on that for the past 8. Which one here? Oh yeah, this was the retracement one. Okay, this is another example of what I'm talking about when I say that it doesn't have to be not doesn't have to be lock in JJ, not lock in JJ. That price isn't always going to follow these price delivery cycles according to their kill zones. It's not always going to do it. It's just not. You're probably like, oh, Asia expanded, right? No, no, it didn't. You're probably like, huh? What do you mean? Look at the body closure and look how it delivered. It's going back and forth. What is that considered? A range. And when price is consolidating, what is it inside of? A range. Pretty simple, right? So if we go to the 30-minute and you see Asia's price action, up, down, up, down. So what's that? It's a consolidation, but just with bigger candles. So Asian has successfully done what? Consolidated. Exactly. Back to the 15-minute. We've seen that Asia consolidated. Right when Asia ends, we see that price expands lower, keeps expanding through London, in which that's fine. Okay. You just have to know how to see the cycles. Okay. I'm just trying to train you to actually be able to see the consolidation, expansion, reversal, or retracement. I'm trying to condition you to actually see it so you can actually differentiate when it's happening throughout the kill zones. Okay, that's all I'm trying to do here. So we see Asia consolidate once again, in which exiting Asia, we start dumping, then going into London, we accumulate a little bit more, start dumping, dumping, dumping. So this entire thing right here is price expanding. Okay, that entire thing is price expanding, in which during pre-market it's still expanding. It's way easier to see in hindsight, way easier to see in hindsight. So what I'm basically saying here is you should be waking up around. I'll give you maybe because I wake up around 7 to just see what is done before and see if pre-market is maybe tradable, see how pre-market acts live. But obviously, you can wake up around like 8 o'clock or 7:30 to really see what's happening, and then you can see pre-market play out to see how it follows up with the previous delivery cycles. But Asia consolidated. We expanded during London, kept the expansion going into pre-market, and then this is the 9:30 open right here. Okay. Now you're probably like, price went down and continued going down based off of the expansion lower. So if we want to continue going down, what do we have to do? We have to retrace. Retrace into what? The original expansion lower. That's why it's called a retracement. Because when you're retracing something, you're likely going to go back into the original direction that we originally delivered in earlier. That's why it's called a retracement. So we consolidated. This is Asia right here. We consolidated. Then, guess what? We drop lower. Let me get my tool again. We drop lower, drop lower, drop lower, drop lower, drop lower. If we want to see price drop lower and keep going lower, what must price do? It must retrace. Now, looking at 9:30 open and putting the kill zones back on, it does do that. Starting at pre-market, of course, but it does retrace up into this fair value gap, and that's exactly where I was looking at too. But for some reason, I don't have it marked, but that's the exact gap I was looking at right there, in which it retraced to it. Of course, you can apply PD arrays and stuff to it like that, but what was I just about to say? Basically, what the market has to do is it has to ensure that manipulation has been delivered in some way, shape, or form. That's what the price delivery cycles are doing. Because think about it. Think about it real quick. Let me just grab my little brushy brush. Hold on, my little brushy brush. If price wants to go lower, right? It has to manipulate what? Higher. It has to do it in general. This is in both reversal and retracement scenarios. Understand? Now let me draw this out for you. Let's say we consolidate, 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 and then we want to go lower. What's going to happen? Let's say the retracement cycle first. What's going to happen is we're going to drop, and then we're going to retrace to manipulate what? Manipulate who? Manipulate what? Manipulate the dumb money. That's what's happening here. They're like, oh yeah, it's pumping, it's pumping. Let's buy, buy, buy. And then we're going to be retracing according to the price delivery cycles, and then we're just going to dump on them and liquidate them. So that part right there is your manipulation. That third stage is your manipulation. Okay. It's kind of sort of like power of three, kind of sort of, but not directly, because this is a totally different form of it, and it's universal. It's not based off of time, in which in this case we're basing it off of time just to make it easier and more readable, but it's not exactly based off of time. It's not based off of a weekly power of three. It's not based off of that. It's simply just price delivering and ensuring that price is manipulated and ensuring that after it manipulated, it can efficiently what? Continue the expansion. Duh. Or expand in the other way based off of the what's the word? The reversal stage. Now going over the reversal stage here. Go ahead and draw another consolidation. My horrible drawing. Oh yeah. Well that hold on, let me redraw that. Okay, that's pretty bad. Okay, back and forth, back and forth, back and forth, back and forth, back and forth. All right. Now, if we want to see price go lower, what must price do in a reversal scenario of stage 3 or of price delivery cycles? We must see price first expand higher to manipulate all the buy side liquidity above the consolidation. You're probably like, oh, that's what it's manipulating. Yeah, it's manipulating this right here. That's exactly what it's doing. Okay, that's exactly what it's doing. In which, if we want to see price go lower, it's already manipulated higher. Manipulation has already been offered. That's what price delivery cycles does for you. Before price expands, this is a rule. I'm going to tell you this real quick before we continue. Before price expands, which is the final stage of delivery for any sort of what's the word? Cycle of delivery in price ever. What must it do first? It has to manipulate. It has to do some form of retracement, some form of manipulation, in which this is the manipulation right here. That second stage, the expansion out of the consolidation for a reversal price delivery cycle, it has to first expand higher into the, not necessarily, well, no, yeah, you want to see it preferably manipulate into the accumulations high or the consolidations high. And then when that reversal kicks in, we start dropping lower and boom, there's the expansion. Or what would you call it? The reversal, according to price delivery cycles. Because I'm starting to reference like power of three stuff because it's kind of looking like a power of three, but it's not power of three. You get what I'm saying? But with the retracement, you're probably like, okay, that's the reverse in which that makes more sense because it's taking liquidity. But what about the retracement one? Let me show you that one more time. Back and forth, 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 back and forth. Now, if we want to see price go lower in a retracement scenario for price delivery cycles, it has to first expand lower. Now, you're probably like, okay, for the ones that are longing here, right? For the ones that are longing, and let's say they had their stop loss right below the accumulations low, in which the algorithm has now ran that. So the dumb money, the retail, the uninformed are now in danger. What price is going to do is it's going to retrace into the expansion lowers price leg to what? What do you think is going on right here in that area? It's offering the dumb money a chance to mitigate their losses before price completely dumps. Price is a little kind to the dumb money, even though we're always hunting them. Price can be a little kind sometimes. It can have a little heart, and that's what this is here. It's barely giving it any chance, but it's giving you a chance to mitigate your orders and get out of most of your positions before price really starts dumping. So you got the consolidation, you have the expansion lower, then you have the retracement. Since manipulation, that's this right here. The retracement is a manipulation. Since the manipulation has already been delivered, and that's all we can deliver, because for price, for a daily, um, what's the word? For some daily delivery, what's the two things that must happen before price expands? It has to first consolidate so we can have some volatility and some liquidity to actually expand, and then we have to manipulate that liquidity, so we won't have to make any more retracements or any what's the word? I can't really get the word, but so we won't have to stall price and basically have price take too long to do certain things. Okay, price is a lazy bum. Price is literally a lazy bum. So what the algorithm is going to do overnight is it's purposely going to give itself the opportunity to do whatever it needs to do so price can expand without having to manipulate, retrace, or do all this other bullcrap because price is a lazy bum. It doesn't want to do all that. It's like, okay, we're going to do this, do this, do that. So when I'm ready to expand, I don't have to do all this other bullcrap, which can stall me and make me slower than I need to be. That's basically what all this is for, because it's accumulating, building up the volatility and the liquidity so it can start doing all the other things, in which the expansion is it expanding lower, okay? It expands lower right outside the expansion. This is just price expanding. It's nothing too special. Literally just price expanding, specifically for the retracement price delivery cycle, because that's all you're going to see it do. You're simply just going to expand just to set the tone for where price originally wants to go, right? That's it's setting the tone right here and creating PD rates to reference later to offer the smart money an opportunity to enter later in the future, in which it does do that. It retraces into those PD rays that are in this swing, whichever PD rays are in here. And then since price is like, okay, well, we done everything. We accumulated like we needed to. So now I have the strength and the momentum to actually move. And we've already manipulated. So I don't have to come back up. I don't have to retrace. I don't have to purge liquidity or reference a higher time for order block. I don't have to do any of that because I already did all of it hours ago. So now it's like, all right, time to be a lazy chud and a bum and simply expand for the rest of my life. That the algorithm is literally a lazy bum. It doesn't want to do a whole lot whenever it needs to do something specific, in which that specific thing is price needing to expand and deliver the narrative for the day. I think I did enough yapping on that. You understand? All right. Okay. You understand. You understand. Now, enough of me yapping on that. That was a pretty good lecture. Now, let me try to find an example of what's the word? Of when price or Asian specifically, or simply the consolidation phase that's normally supposed to happen during Asian, it can, it can actually expand based off of the previous New York session's consolidation. Because the consolidation from New York can occur after like lunch and like literally consolidate for the rest of the day, in which Asian can actually use that price action to expand and not even consolidate, making the algorithm even more of a lazy bum. Yeah, price is very, very lazy. I'm going to show you that in a second. Let me just find an example. Okay, perfect. Here's an example. Perfect, 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 perfect. I think I went over this example in the Narratives Arcana section 2, so I guess this is cool to use. Now, notice in the previous New York session, from this Asia here, starting at 7, previously from here to here, price was accumulating in New York, which is the previous kill zone from Asia, or before Asia. So Asia or the algorithm in general is going to be like, oh, you already accumulated for me? Man, I don't got to do that. You already did it for me? Bet. I'm about to go do it, whatever I need to do. So the algorithm is literally going to be a bum again and is going to take advantage of this previous consolidation that occurred in New York. Now, the consolidation needs to be a little decent. You would need to actually be able to see the consolidation, point it out, and you can show it to a newbie, and the newbie will basically say, "Oh yeah, the price isn't going anywhere. It's just moving side to side, back and forth." Right. So you need to be able to see it. And like I said, on the 15-minute for situations like this, whenever you see New York kind of consolidating, the 15-minute is, where you would best see it because you actually see it consolidating. 15-minute is like that nice mid and balanced time frames where you really see everything accurately. So we can clearly see before Asia, which was, the previous New York session, we could clearly see it was what? Consolidating. So Asia is going to take that chance and it's going to be like, oh, bet you already consolidated? Man, I'm just going to expand because you already did part of the price delivery cycle for me. And like I said, this is universal. So it can do these price delivery cycles literally anywhere, in which this is one of those anywhere parts I'm talking about. So we have what? Consolidation. Then we have expansion, in which it keeps expanding, keeps expanding, keeps expanding, and keeps expanding. Then London kicks in, creates the high, starts consolidating more, in which it drops. Now, what price delivery cycle is this? It's the reversal price delivery cycle because we had the consolidation, then we had the expansion, we had the high created, and then it reversed. So that's what? The reversal price delivery cycle. But the main characteristic is that sometimes Asia can use the previous consolidation that occurred during London. I mean, not London, but during the previous New York session. So just keep that in mind to before you directly look at Asia first or you see Asia expand, be sure to look at the previous New York session to see exactly what happened to see exactly what happened there. Am I talking a little too fast? Because I'm having a lot of stutters recently. Do you guys hear that? Because when I stutter, right, I feel like it just ruins the whole momentum and like track of the teaching, and it just confuses everybody. Like I really feels like that. I really feel like that happens. Like just now, I just stuttered. Like I feel like I'm just yapping away and just talking about a whole lot of nothing and not teaching properly. You guys tell me if I need to work on that. I'll, work on it in the background. Just let me know in the comments. Anyway, this is the reversal price delivery cycle, but using how Asia used the previous New York's consolidation. Anyway, enough of this example. There is something else. There is something else I want to show you. You see how price accumulated again or consolidated again? It can start another price delivery cycle within a price delivery cycle. Like I said, this is universal. Universal meaning it can be applied to almost everything that is controlled by the algorithm. Well, no, everything that is controlled by the algorithm, it can be applied to. But when I say universal also, I mean it can occur anywhere in the chart. Anywhere. Anywhere. Normally, you would see it a bit more accurately and better delivered during the kill zones. As you can see, I'm guiding you through the kill zones. But within a price delivery cycle, another price delivery cycle can form. Like on God, I'm not even joking. So watch this. Watch this, right? You have a consolidation right here, right? Right there. While we're about to reverse for this price delivery cycle that started at this consolidation, we created another consolidation. Watch this. Price expands outside of it during pre-market. We're expanding. So if we want to see price keep going lower, what should happen for this price delivery cycle? For this price delivery cycle right here, if you want to see price keep going lower from this expansion lower on the second stage, what will we want to see price do on the third stage? Retrace. Does that happen? Yeah, it does. It does happen. It actually does happen. So these price delivery cycles are fractal, universal, and can happen literally anywhere. So pay attention. It should be pretty easy because I think I'm gonna humble myself and not gonna be arrogant, but I think I'm teaching this to you properly. Hopefully I am. Just give me feedback and I'll do my best to make sure I teach you this properly. But it does retrace into the expansion swing, respecting this fair value gap right here, in which New York kicks in and starts delivering lower. And delivers lower. Did I say that right? Delivers lower. Yeah, I did say that right. I feel like I'm retarded. But it delivers lower pretty smoothly, right? It does it pretty smoothly. I would say so, right? Nice, just beautiful, drop lower. Retracement higher, drop lower. Mini retracement higher, drop lower. It's beautiful. Absolutely smooth. Normal price action that you would love to see, right? Normally this This price action's been horrible recently. Dude, don't even bring up the word price action around me. I'm probably gonna get PTSD. Let me see if there's anything else I gotta teach. Let me think. Uh, Someone insert elevator music into the background. Hmm. I don't think there's anything else I need to teach you. I don't think with price delivery cycles. Nah, I don't think that's it. Oh yeah, one more thing to mention. It's not like I don't gotta use an example for it, but it's pretty simple to see. Just eyeballing it or just using your mind to picture it. But sometimes if the previous New York session consolidates, Asia can continue that consolidation. It doesn't have to expand as it did here, but it can continue that consolidation, making the price delivery cycles deliver even quicker and with more aggression. So remember that if the previous New York session, what's the word? Consolidates at the end of it, Asia can do two things. It can continue consolidating from that consolidation, making a larger consolidation, building up more liquidity, building up more volatility, stuff like that, which will simply cause the price delivery cycles to deliver more aggressively and what's the word? With more magnitude or higher magnitude. Okay, that was just one little thing I had to mention before we left. Anyway, 27 minutes. I always have to look over at the time or the amount of time I've been recording after I'm about to end it. Anyway, 27-minute recording. I guess it should have been this long because I gave you all the details you need to understand price delivery cycles. And I hope I taught you this well. This should be insightful to your trading and when it comes to depicting narratives and daily biases. And this is the end of price delivery cycles. Until the next one, good luck and good trading.